Hello, ladies and gentlemen. Good morning from this part of the world, and depending on whichever time zone you're tuning in from, I'm excited to welcome you all to yet another promising edition on the Forex Morning Mastery, your daily dose of financial insight and trading strategies. Today is Wednesday, the midweek, and of course, during our midweek session, we usually come here to review our performance for the week, review how the market has been behaving, and of course, use that information to strategically position ourselves for the second half of the week. And in fact, today promises to be an exciting session, especially when we are looking forward to a very important economic feature from the United States, which includes the Federal Reserve interest rate decision, which is one of the major events that majority in the market have been looking forward to, and of course the CPI data, which is going to be coming up earlier than the interest rate decision. And of course, we know how important the CPI data is, as it gives us an insight into the inflationary pressure in the United States economy, which will help the Federal Reserve in deciding what the monetary policy is going to be like. And of course, this situation usually is expected to bring in some high level of volatility, and of course we do want to be on standby to capitalize on that opportunities. And of course, we have been seeing, though on Monday we had some very interesting positions. The US All-Spot has done pretty well since the beginning of the week. The GBPUSD, though, it has been a little bit bullish, but within this bullish momentum, we see that the market has been very choppy, where every buy positions we take keep bringing price, keep coming back into our entry points, giving us break-even situation throughout the course of the week so far. Though the momentum is still looking bullish at this point, and in fact we have a buy position running which is still in positive at this point in time, but we are going to be looking at that one too as well. Then on the XAUUSD, we're still struggling to gain some traction on that particular asset, and of course this whole consolidative phase, which is characterized by in the market lately, we all understand why that is, as majority of market participants may have stepped aside waiting for today's event before making any investment decision. As a result of this, we are looking at low liquidity in the market since the beginning of the week. So today, I believe and I do have a strong feeling that we are going to be seeing some strong traction today, and of course we do want to be on standby to capitalize on that move. And as a result of this, I do have very interesting trading setup to share with you this morning, as we are going to be looking at it together and see how we are going to be managing our position using both the technical and fundamental perspective of the market. My own name is Sharif Daramola, and for the next 40 minutes thereabout, I'm going to be your host, as I will be taking you on a trading journey where we shall be reviewing this market dynamics from both technical and fundamental perspective. So I encourage us all to stay tuned in so that you do not miss out on any of these ideas we will be deliberating on today. And of course, you have the privilege of asking me any questions whatsoever as regards to the financial market. I'm here and willing to be of help in that regard. And for those of you who are joining us for the first time, because I know there will be some newcomers in the house who may be wondering what this is all about. Well, the Forex Morning Mastery was born out of the necessity to do follow-up details on the weekend videos I usually share. So I share some couple of videos during the weekend which details what my plans is going to be looking like, what my thought process are as I prepare for the new week. And during the week, we come here 3 times in a week: Mondays, Wednesdays, and Friday, coming together as a community and engage in follow-ups and reviews of our current positions in preparation of both the London and the New York session. And it's important for me to mention here that this is not a signal service platform, but instead it is an avenue where we all come together as technical fundamental traders to have a deep understanding into what the market is saying, and of course using that information to strategically position ourselves for the next move, be it a scalper, day trader, positional trader, or a swing trader. So we come here together to see what levels, what structures, what zones is much more reasonable for us to either buy or sell whatever commodity we are looking at on a daily basis, or a weekly basis, and of course use that information depending on what kind of trader you are to position yourself for the next move. And while we are here to learn, it's important for you to also know that we want to equip ourselves with knowledge and skills necessary to make trading decisions independently. And trust me, the more time you spend with us in this community, the better you will become at comprehending my analytical approach, and of course utilizing the information you gather here to enhance your own trading decisions and strategies. So once again, I do welcome you on board and encourage you to actively engage in the comment section. And do not forget, if you have found this content helpful and useful, kindly give the video a thumbs up. Your likes are very valuable to me personally, and of course it also helps in promoting this community by liking the video. The YouTube algorithm promotes the video to a wider audience of traders who may find this content beneficial to them too, and thank you very much as you do so. So with that being said, here we will be diving right into the business. But before I do, I can see a bunch of comments right here in the in the comment section. Good morning to you guys. I can see you, Simon Bayoni. Good morning to you. Glad to have you around. Hello, Torres Master. It's been a while since I saw you. Trust you are doing very well. Okay, I take that as a compliment. Thank you very much. Swing Pirates, good morning to you. Okay, Swing Pirate says that is looking to buy GBPUSD today. Okay, all right, we are going to be looking at, don't worry, we're going to be looking at that in a moment. Though we currently have a buy position running. I think we have about 2 buy positions running on the GBPUSD at the moment, but we will be looking at that and see what our plans is going to be looking like for today. Then I see you, Richard Blackett. All right, it's a pleasure having you around, Richard Blackett. My namesake, Sheriff Abdul Kadiri. Good morning to you too. Glad to have you around. I can see you, Constant Tameklo. I can't pronounce your first name, so I'll rather go with the Constant Tameklo. Good morning to you too. Good morning to you, Dalitso. Glad to have you around this morning. I'm loving the energy this morning, and let's extend that energy into the like button as well. Click on that like button and let's support this community to grow. Thank you very much as you do so. So with that being said, here we will be diving right into the business. And for those of you who have been with me for a while, you know the first thing we normally do is to keep tabs with the fundamental factors that is going to be influencing the sentiment in the market. And of course, you know, by doing so, we want to be focusing on the high impactful economic event where we tend to pinpoint potential correlations between, I think I can, my face, okay, I think it's better right there. So to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and most importantly, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we have been monitoring since the beginning of the week, we have been focusing on economic features from both the United States and the United Kingdom economic docket. Though we usually focus on high impactful event, but when we have days where we do not have high impactful event, we include the mid-tier economic features that will help us to have a broader view into what majority in the market will be looking at. And so far this week, we've had some high impactful event, especially on Tuesday from the United Kingdom economy. We had labor data related events which gave us an insight into the health of the United Kingdom economy. And of course, from the data we were able to come up with, things are not looking rosy for the United Kingdom. Though we had a very good average earnings, including bonus and excluding bonus, which came in at 6% and 5.9% respectively, which was a little bit higher than market expectation, but it's still the same figure with what came in the previous month. Then we also have the claimant count change, the employment change, and a high and low unemployment rate, all of which came in below market expectation, giving us an insight into the contraction in the United Kingdom economic docket. Now, this whole contraction in the labor sector in the United Kingdom could be attributed to the higher interest rate in the United Kingdom. And of course, we've had stakeholders complain about this, and this might likely put pressure on the Bank of England to bring down that interest rate. And of course, we are looking at the Bank of England's interest rate decision happening next week. And if we look at what has been going on in the global space as regards to the central banks, last week we saw the ECB reduce their interest rate by 25 basis points. We also saw the Canadian government too as well are also expected to reduce the interest rate by 25 basis points as well. And the Bank of England, from what is going on in that economy right now, there is a high chance that interest rate will be reduced this month. Now, as a result of this might exert some selling pressure on the Bank of England at the moment. But we are going to be looking at how the market has reacted in the GBPUSD market to see what is going on. Though the market has been very choppy, and we know why that is happening, as everyone is looking forward to the US macroeconomic data coming up later today. Now, fast forward to today, Wednesday, June 12th. Hold on a second. Yes, so today, June 12th, we are looking at a bunch of high impactful events, though we had some mid-tier economic features, especially from the United Kingdom. And since we are monitoring the GBPUSD, it's very important for us to know what is coming out from that economy. Now, the gross domestic product, of course, we all know what the gross domestic product is. It is a percentage value of goods and services produced within the boundaries of the United Kingdom economy. And this gives us an insight into how healthy the economy is. And from the look of things, the data that came in this morning wasn't that impressive, as it shows that there has been neither contraction or expansion in the United Kingdom in the last 30 days compared to the previous month, which came in at 0.4% expansion. So there is no growth whatsoever in the United Kingdom in the last 30 days. That's a very, very red flag for us all. And then we also had the industrial production. We also had the manufacturing production, all of which came in below market expectations. So the industrial sector, the manufacturing sector is not doing very well as well. Now, what is the implication of this? It just shows us how the high inflation in the United Kingdom is affecting the manufacturing sector. Things are very expensive. Borrowing cost is very, very high. To borrow money from the bank is very, very high. Hence, companies, manufacturers are not borrowing money, pumping money into their into this sector. And of course, this has also led into layoffs, where we've seen unemployment rate continue to rise for the fourth consecutive month in the United Kingdom. So things are not looking rosy from that particular sector, from that particular economy. Now, going further, today we are going to be looking forward to the consumer price index from the United States economy, and this is going to be coming in about 3 hours from now. So we want to be marking out that timing on our calendar, as we do want to be around to see how the market is gradually anticipating that event, and of course how the market will react to whatever comes out of that event. Now, for those of us who do not know what the CPI data is and how important it is for us as traders, the CPI data is considered to be a measure that examines the average prices, average change in prices paid by consumers for goods and services in the last 30 days. Now, it is expected that a higher than expected CPI data can lead to concerns about inflation, impacting market sentiment, as it may prompt expectations of tighter monetary policy to control rising prices, and this may lead to the Fed probably maintaining maintaining a higher interest rate for an extended period of time. And if the CPI data comes in below expectation, then it shows that inflation is gradually thinning out, and they need to probably loosening their monetary policy by reducing interest rates. Now, if we look at the previous data that came in for the month of April, for the month-on-month we had 0.3 and we had 3.4% for the year-on-year. And if we consider the CPI for excluding food and energy, it came in at 0.3 and 3.6% respectively. Now, if we compare that with the market expectation, that is economists what they're expecting for this month, you will see that we have some of this data which is a little bit lower than the previous month. Look at the month on month, for instance. Right here it is at 0.1%, a little bit lower than the previous month. And then we have the year on year, which comprises that data that exclude food and energy, coming in at 3.5% as against the 3.6% of the previous month. So from what is on ground right now, majority are expecting that inflation is gradually thinning out. So we're going to be looking forward to see what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectations? And of course, we understand from a theoretical perspective what the implications of the outcome of this data will be on the US dollar. Then fast forward to about 9 hours from now, we are going to be looking forward to the Federal Reserve's interest rate decision, which will be coming up. And of course, this is going to be projecting the outcome of the Federal Reserve's meeting that started yesterday. In fact, the FOMC has started the meeting since yesterday, and today is when they will be coming out with a decision on what the outcome of the meeting is. And this will give us an insight into whether or not they are going to be changing or maintaining the current interest rate. But from the look of things, there is a high expectation that interest rate will be left unchanged. So we look forward to see what the actual data is going to be like. And one thing I also want us to understand is that this decision has a significant impact on the sentiment in the market, as it reflects the central bank's assessment of the economic conditions in the United States, and any changes can influence borrowing costs, investments, and of course overall economic activity. So this is one major event that majority of market participants will be looking forward to. Then simultaneously, we are going to be looking at the Fed monetary policy statement. Well, it's not really one report that majority look at, but for those who are well grounded in the financial market, they do want to have a comprehensive assessment provided by the central bank, which will be detailing the economic outlook and the rationale behind the monetary policy decisions they will be making today. And its impact on the market is also very significant as investors closely analyze this report for insight into future interest rate moves, inflation expectations, and of course the overall economic health. Then we also have the economic projection, the interest rate projection. Usually they project what interest rate will be looking like for about a year, two or more, and this is what this event is. Now, the other important event for today is the FOMC press conference. Well, this is an important event where the Fed chairman will communicate the central bank's monetary policy decisions, the economic outlook, and of course answer questions from the media. Now, its impact on sentiment is substantial as investors will closely analyze whatever I will be saying is statement for insight into future interest rate changes and overall economic conditions. So this is another very important event. I will be giving us a highlight into what it will be saying maybe tomorrow or Friday, but it's an important event you also want to be looking at. I may share the link to the video of the Fed chairman's speech on my Telegram platform if you wouldn't mind to listen to whatever is going to be said. So these are the high impactful events we are going to be looking forward to today. And like I usually say, major key players in the market who are also preparing for this event usually have an inner cycle of people who give them an inside information of what the data is going to be like. So they usually have first-hand information even before the data comes out, and as a result of this information they build a position ahead of the event. And as technical traders, what we want to be doing here is to look and sniff through the current chart and look out for patterns and structure which will reveal what major key players are strategically positioning themselves for, and giving us with this information we can easily identify potential buy or sell entries. So with that being said here, let's dive right into the business. So as usual, the first asset we are going to be taking on this morning is going to be the USOILSPOT. And in fact, since the beginning of the week, we have done tremendously well on this particular asset. I think as at the first half of the week, we were able to scoop in close to 400 pips. I think more than that after capitalizing on we had three buy positions before that choppy market condition began yesterday. And of course, I gave us an update yesterday evening that we will be looking out for more buying opportunities if price action breaks out of the $78.20 level, which has actually been executed. Now, for the sake of educational purposes and for the sake of those who are not part of our live session on Monday, let's quickly run through what really happened at the beginning of the week right here on the 1 hour time frame and what led to the decisions we made. Now remember, especially for those who are joining us for the first time, I wouldn't be going into the top-down analysis on this asset. We usually focus on the 1 hour time frame, our execution time frame during the Forex Morning Mastery. But if you do want to have a deep insight into how we got to this point, if you do want to have a background knowledge of how we got to where we are on the 1 hour time frame, then I would encourage you to watch my video on Monday on the USOILSPOT. The links are right in the description box of this video to have a deep insight into how we got here. Now, with that being said, let's dive right into the business. So as at the beginning of the week, we had our key level, remember, at the $76 area, and you all know how we use our key levels in this community. As long as price trades above our key level, we want to be looking out for patterns and structures that support the idea of buying, and if price drops below our key level, we want to be looking out for patterns and structures that support the idea of selling. except for rare cases where structure says otherwise. Now, besides this key level here at the $76 area, remember we had this resistant line of that descending channel we identified on the 4 hours time frame, slicing through that key level around that area. And of course, you know how we treat our descending trend lines. When price trades below them, we look out for selling opportunities, and we do not consider buying unless the descending trend line is breached and broken to the upside. Now, at the beginning of the week, the first 10 to 12 hours of the week was more of a range bound structure, as we saw price action confined within the $75.85 level, and of course the $75.25 area, to emphasize the prevailing uncertainty in the market at that point in time. And usually whenever we identify this kind of setup, it's a signal that there is an indecision in the market, and what we normally do is exercise patience and wait for the market to finally make a directional decision, which usually comes in form of either a breakdown of the support line of that range to give us an opportunity to sell, or the breakout of the resistant line of the range to give us an opportunity to buy. And of course, we did not see any point in time that price broke down the support line, hereby negating any idea of considering selling the US OILSPOT at the beginning of the week. Now, with this situation here, we saw price break out of the descending trend line, which doubles as the resistant line of that descending channel we identified on the 4 hours time frame. And of course, by positioning ourselves right above the $75.85 level, we were able to capitalize on our first buy position. And in fact, if you had missed out on that opportunity, the market came back to retail structure, and of course we maximized the potential of the bullish move by adding multiple entries. We had one entry at the $76 area. We also added one more at the breakout of the $76.50 level. And as a result of this, if we look at the first buy position, we saw price move over 230 pips. The second buy position moved over 220 pips. That's over 450 pips already. And we had the third buy position move over 160 pips. So we had roughly about 500 pips as at the beginning of this week. And I can remember mentioning that we should move all our stop losses to secure the current buy position, as anything could happen. And of course, if you had done so, you must have been taken out with a minimum of about 400 pips on that particular one. Then during my commentary yesterday morning, I updated us with a structure here, though initially the support line was somewhere around the $77.80 or the $77.75 area, where is it here? I think $77.50 area, I guess. That was where the support line was at that point, giving us a range bound structure. And of course, you all know how we use our range bound structure. We look for breakdown or breakout to join any opportunity the market presents. And of course, we saw yesterday evening, we saw price break out of the resistant line of that range bound structure at the $78.20 level to trigger another buy position. And currently we have this position running with a minimum of 40 pips in profit. And for those of us who capitalize on this opportunity, well done and kudos to you. So as at this point in time, with a buy position still active, I'm of the opinion that it is high time that we moved stop losses to secure the current buy position while we wait and see how the market is going to be anticipating today's Fed interest rate decision, and of course the US CPI data coming up later today. And from the current structure here, I am suggesting that all stop losses be placed at this fourth entry here at the $78.20 level, giving us a worst case scenario of break even if price action drops to the downside. Now, with a well-secured position at this juncture, what is our plans for today? How do we intend to um, um, navigate this current market dynamics? And to do this, we really need to have an insight into the market drivers, the fundamentals that is driving the sentiment in this market. Now, for those of you who saw my commentary this morning, you will be familiar with what I will be saying now, but let's quickly run through what's is really going on in the market, and of course, why is it that all of a sudden the US oil spot has continued to gain momentum? Well, at the beginning of the week, I think at the later part of last week, during the second half of last week, I think on Wednesday, from Monday, Tuesday, Wednesday of last week, there was this speculations in the market that interest rate will be cut anytime soon due to the not too impressive economic figures from the United States. And as a result of this, we know that the US oil spot, being a US dollar denominated asset, whatever happens to the US dollar will usually influence the sentiment in the US oil spot market. Now, if it's expected that the US dollar is going to drop in value, we usually see a surge in prices of the US oil spot due to the increase in demand of the commodity, because we all know a cheaper US dollar makes the commodity makes it cheaper for other currencies to buy, because it's cheaper for you to convert to a cheaper US dollar. But if the dollar becomes expensive, it becomes expensive to convert your local currency to the US dollar, and as a result of this, it dampens the demand for that commodity. So this momentum we were enjoying this week was as a result of this sentiment last week, and not until last week Friday, when we saw the labor sector data from the United States coming to us as a surprise, coming in higher than expected, has further thrown a clog in the wheel of the expectation that we will be seeing any interest rate cuts. So the market dynamic has shifted lately, as majority are now considering that interest rate may be kept higher for an extended period of time due to that labor sector. But we will not be jumping into conclusion, as we still look forward to the CPI data today, which is considered to be an inflationary gauge data, which will be giving us an insight into the inflationary pressure in the United States. So in anticipation of the CPI data, it's very, very important that we secure this position, as we never can tell what could happen. So if the CPI data comes in higher than expected, we may likely see some selling pressure on the US oil spot, as this may signal that Feds may keep interest rate higher for an extended period of time. Then another factor that is supporting the ascent of the US oil spot is the recent report from the EIA, the Energy Information Administration in the United States, who have revised its 2024 world oil demand growth. So they usually have this projection every month, where they, based on what is on ground, they determine what the demand supply dynamic is going to be like for the later part of the year. And from the report they just projected now, they are saying that there's going to be an increase in consumption of oil per day. That is 1.10 million barrels per day, as against the previous estimates at 900,000 per day. Now, the OPEC Plus 2 as well also upheld its optimistic outlook for strong growth in the global oil demand for 2024. Now, this is somewhat a positive signals for buyers of US oil spot, because this is what they want to see. They want to see reports that shows that there's likely going to be high demand. Now, why is there going to be high demand? Why are they projecting high demand? Now, the reason why this high demand is being projected is due to the summer holidays. And during summer holidays, there is always a high turnover of travel. People travel, and when you travel, you need fuel to travel, of course, and this usually increases the demand for this commodity. So at this point in time, majority are projecting a high demand in oil, due to the summer holidays, so due to the summer travel, and this could potentially make the path of least resistance for oil to the upside. So with that being said, we cannot ignore the potentials that sellers can also come into as well. So we're also going to be taking that one too into consideration so that we can keep a sweet balance between buyers and sellers expectations. Now, what is the driving factor for sellers in this market? Well, a stronger than US job report from the previous week has reinforced the Federal Reserve hawkish stance on monetary policy. Now, the Fed is expected to maintain higher borrowing costs for an extended period of time, which usually reduce the demand for oil, affects the economy as well. But the CPI data today will let us know what the implication of this will be. So if the CPI data comes in higher than expected, we may likely see selling pressure being exerted on the US oil. But if the data comes in lower than expected, then the path of least resistance remain bullish on the US oil spot. So as it is right now, as market participants await the Federal Reserve policy decisions today and the CPI data for fresh impetus, it is very, very important that we secure the current buy position while we continue to monitor price action to see how the market will anticipate and react to this event. But I will be dropping in some new levels to maximize bullish opportunity if the market, if the data comes in support of the US crude oil, and if it doesn't, I will be giving you updates on where we are going to be selling. But in the meantime, selling opportunities is going to be right below the $77.25 area, which is right at the support line of that range bound structure. However, if we see significant signals even before the breakdown of that support happens, something like series of lower highs where price drops below the resistance line of the $78.20 level and continued selling pressure persists below that structure, then that will give us a sign that buyers are finding it difficult to maintain that bullish traction, and we could look out for selling opportunities early enough before the breakdown of that support line happens. For me, I will still consider this to be a counter trend opportunity. A retracement move maybe back into the key level that was broken at the beginning of the week in anticipation of an uptrend continuation. So, and if we look at the distance between this point and this point, we are looking at over 200 pips, which is what, considering if that is going to be the case today, but I doubt if that will happen. But if it does happen, we want to be on standby to capitalize on that opportunity. So as it is right now, like I said, move your stop losses on the current buy position, secure this position while we continue to monitor price action. So this is my simple view on the US oil spot for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. And if you can use that time to mark out these levels on your chart, as they will be playing a significant role in guiding our trading decisions for today. See you in about 10-15 seconds from now, and do not forget to click on that like button. Thank you very much as you do so. All right. So, in the absence of no questions, I want to assume that we are all on the same page, and all I've said so far has been quite explanatory. So, as a result of this, we shall be moving on to the next financial asset on our watch list. Stay tuned in. So, the next asset we are going to be looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And of course, since the beginning of the week, we have been buying this asset. At no point in time did we consider selling, as the market did not meet the bearish expectations we planned at the beginning of the week. Now, if you look at this current structure here, you will see that though we have, even within this all choppy market conditions, we are able to notice a series of higher highs and higher lows, which projects the potentials of the buyers in this particular market. And of course, we had some key factors here that we highlighted at the beginning of the week. And let us look at that quickly for educational sake. And looking at what we had here at the beginning of the week, we had this range bound structure where price was initially, remember, the week started on a bearish note, and we saw price started at around the 1.27310 area, and then it dropped to the support line here at the 1.27075. Now, with this whole structure here, it was more of an indecision going on in the market at that particular point in time. However, after our live session, I think during our live session on Monday, we were able to join this bearish move. Let me zoom in so you can see. We joined this bearish move, and this price went to as far as 20 pips. And I did updated us on my TradingView and Telegram platform that we should move all stop losses, secure that position as we may as we look out for more selling opportunities. And I also mentioned during the live session that for those of us who missed out on that opportunity, let's wait for the market to come back, retest the structure in an attempt to continue the downtrend. And to further guide our trading ideas on that particular day, we had this descending trend line which captured the series of lower highs since last week Friday. And as it is, this trend line here was a deciding factor for us. If price trades below the descending trend line, we continue to look out for selling opportunities. But if price breaks out of the descending trend line, then we will be looking out for buying opportunities. Unfortunately, we had the sell position triggered following hoping that this was a retest of structure to continue the decline that started the week, but unfortunately it failed. We got stopped out on that position, and of course I did give us an update after marking out this level at the 1.27150, which beautifully shares a confluence with that descending trend line we marked out here at the beginning of the week. So we were looking forward to the breakout of both that 1.27150 and that descending trend line to join an uptrend move. And as you saw, we had the buy position triggered, and since that moment we have been buying this asset. Though we had price snap back into our entry point multiple times, but we still maintain that bullish bias. As you know, we keep on doing our re-entries at every point in time price comes into that area, especially when we notice buy pressure coming in from that level. So at this point in time, we have a minimum of 3 buy positions running. At this point, we had the second buy position triggered, had the breakout of the 1.27310. We also added another one at the breakout of the 1.275, which just we just saw it broke out of that structure this morning. Now, for those of us who had capitalized on this opportunity, well done and kudos to you. So at this point in time, I will be encouraging all us to move all our stop losses to the third entry zone. So anywhere around the 1.275 seems reasonable to place all our stop losses, secure this position. As you all know, we are expecting some high level of volatility coming up today as market participants anticipates the US macroeconomic data. Now, from the look of things here, irrespective of the UK economic data that came in this morning below market expectations, we can still see the pound sterling still trying to gain some traction, which for me may be a retracement of that bearish impulse leg that started last week following the NFP data. Now, for me, the question here is, how far will this retracement phase go? Look at what is happening here. This for me is like a retracement move before the downtrend continuation will happen. Now, for us to project where that is going to be, we will need our Fibonacci retracement tool, of course, running it through the previous impulse leg and aiming at an area between the 50 and the 78.6%, which is going to be serving as the golden zone area, where the possibility of a selling opportunity could emerge from. So let's highlight that sell window. Okay, so I usually have it in yellow color. So we have a sell window, sell window between 1.27860, right? 1.27860 and 1.275. okay, 1.275. So that is our sell window right here. So let's take out the retracement too. So what we are going to be doing at this point is to, that's why I said we should move our stop losses and secure this position. So what we'll be looking out for at this point is any sign of selling pressure or formation of a reversal pattern. It could come in the form of a double top, head and shoulder, or even a rising wedge, where the breakdown of the neckline of that reversal pattern will be a beautiful confirmation for us to sell. Then another thing I would like to call our attention to here is how this zone we just identified here shares a confluence with that ascending trend line we identified on the higher time frame. Remember, for those of us who saw our weekend video on the GBPUSD, this is the ascending trend line, and remember, this ascending trend line has been supporting the bullish momentum in the last couple of months, and at no point in time has this ascending trend line been broken to the downside. And of course, we saw what happened last week. Price did break down that ascending trend line for the first time, and usually, and from a technical standpoint, when price breaks out of a key structure like this, we expect that some point in time price may come back, retest the structure in an attempt to continue the downtrend scenario. Now, we have a very beautiful confluence here with that sell window, and this is where our center of focus is going to be for today. We are going to be monitoring how the market is going to be reacting to that zone ahead of this CPI data, which is coming up in about 3 hours from now. And like I said, if we observe any form of reversal pattern right here on the 1 hour time frame, or even on the 15 minutes time frame, then we will be getting ready for selling opportunities. So let's see how the market is going to play out. This current setup we have here requires a high level of patience, so please, let's ensure that we are patient enough for the structures to mature. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give us update as at when due. So this is my simple view on the GBPUSD today. I think I even have a new trading setup on this chart. Let's look at this together. Okay, so okay, here we go. So let's see how the market is going to be playing out on this structure. um, if you have any questions whatsoever, feel free to let me know in the comment section. So as always, let's take some 10-15 seconds off. Let's wait to see if there are any questions, and you can use that time to mark out these levels on your chart, as we will be needing them as reference points to guide our independent trading decisions for today. And thank you very much for those of you who had clicked on the like button. I really do appreciate your support. It means a lot to me. And for those who are yet to click on the like button, please do. This is the cheapest and only way you can support this community to grow, and thank you very much as you do so. So see you in about 10-15 seconds from now. All right, so in the absence of no questions, I want to assume that we are all on the same page. So with that being said, let's move on to the final asset on our watch list for today. I just realized that I had my mic off, so let me run through again. So we are running through the XAUUSD one more time, and this is my favorite asset, of course. And since the beginning of the week, we have been buying the XAUUSD, though despite buying, the momentum hasn't been convincing enough for us to be really sure that price action is going to the upside. Though the bullish momentum is still intact, but it's still very, very weak based on what is happening at this point in time. And of course, we all know why this is happening. We can at least say that the anticipation of the US CPI and of course the federal interest rate decision is one of the major reasons why this is happening, as major key players must have stepped aside from the market waiting for this data to come in before making any aggressive bet at this point in time. So as a result of this, we can see a choppy market condition at this point, as price is not really taking any significant move at this point. Now, for the sake of clarity, let's run through what really happened on the beginning of the week for the sake of educational purposes and for those of us who missed out on our Monday session. And this will also give us an insight into what guided our decisions and how we intend to follow up today. And please note that I will not be talking about I'm not going into the higher time frame. We are only focusing on the 1 hour time frame. But if you do want to have a background knowledge into how we got to this point you're seeing on your screen right now, then you might want to check my weekend video on the XAUUSD, where I did a top-down analysis on this asset. You can see the link right in the description box of this current video you are watching. So with that being said, let's run through what really happened at the beginning of the week. Now, remember, in the previous week, we had this massive sell-off following the NFP data, as we saw price drop significantly into the $2,287 area. Now, as at the beginning of this week, we saw buy pressure resume from that particular area, and since then, price action had consistently and uniformly found higher highs and higher lows, though the momentum is not as strong as expected. Now, for the first 12 hours to 13 hours of the week, price action was confined within a range-bound structure that is between the $2,302 and the $2,287 area, giving us a range-bound structure. And of course, whenever we see this on our chart, it more or less tells us that there is a prevailing uncertainty in the market at that point in time. And usually, whenever we see this, we exercise patience and wait for price action to either break down the support line to give us an opportunity to sell, which obviously never happened, or the breakout of the resistant line of that range to give us an opportunity to buy. And of course, we saw our price broke out, retest the resistant line of that range, and since that moment, we have been buying. Though we had an attempt to sell on the later part of Monday's trading session after being taken out of that buy position, but unfortunately that sell position did not do very well. I think we recorded our first loss on the XAUUSD on the later part of Monday's session. But since then, price action had been gaining momentum. In fact, the last 24 hours we saw some re-entries, especially yesterday morning, and we rode that momentum all the way up. We also added another one at the breakout of the 2,313, as you will see here. I just saw a comment now that says that I am mute. Am I really mute? Please let me know in the comment section. From my end here, my headset is telling me that the sound is good. Please let me know in the comment section if I'm truly mute, so that I can adjust. I really look forward to your feedbacks. So I will continue while looking into the comment section. So the 2313 got triggered yesterday, and of course price has been trading around that area into today's trading session. And of course, one of the major reasons why we are looking at this consolidation phase is due to the anticipation of the US macroeconomic data coming up later today. So my opinion at this point in time is that for those of us who still maintain a buy position on this assets, kindly move all your stop losses and secure some profit at this point, anywhere around the $2,309.50 level. 70-cent level seems most appropriate to move all stop losses to, while we intend to give enough breathing space for price action to move around. Now, with a well secured position at this juncture, it's important for us to also keep tabs with those fundamental factors that will be influencing the sentiment in this market. What are the major drivers of the XAUUSD for this week, and how are we going to be using them to navigate this current market dynamics? Well, I will have to reshare what I shared with us on Monday, as it hasn't changed at all. We are looking at the US economic data. The release of the US non-farm payroll on Friday has been a major setback to the easing of the monetary policy of the United States. Now, the CPI data today is going to be playing a significant role for us all, as whatever comes out today will be guiding our trading decision, will be guiding the market's decision. Now, like I said earlier, if the CPI data comes in higher than expected, there is a high chance that the dollar will gain some traction, and this may not be in favor of safe haven assets such as the gold. Then another factor that could be influencing the gold market is the central bank buying trend. Remember, we talked about how the People's Bank of China has altered buying the gold. Remember, they've been buying the gold. They've been trying to boost their gold reserve for the last 18 months. And recently, reports showed that there has been no growth in their gold reserve since the month of April. So the reserve, the figure in the month of April remains the same figure we saw in the month of May. So this was a sign that People's Bank of China may have halted their buying of gold. And remember, this People's Bank of China has been a major driver. The purchase of gold from People's Bank of China has been a major drive in the gold market. Has been escalating price hopper further to the upside. Now, if the People's Bank of China are no longer buying gold, then I think that the path of least resistance may be to the downside, as this may incite some profit-taking activity in the market, as majority who had capitalized on that upward momentum may not want to get caught up in a plunge in prices, and this could lead to some choppy market conditions as well. Then finally, the global rate trend will also be playing a significant role. Now, we heard that with recent rate cuts by the Bank of Canada, we also saw the European Central Bank also cut interest rate last week, and the potential that the Bank of the Swiss National Bank will also be cutting interest rate, and of course the Bank of England is also expected to cut interest rate. And now with this recent developments, chances are that investors may likely push their funds from currency assets into gold assets. So as a result of this, we cannot ignore the potential that price could still climb to the upside. Now, with this whole market dynamics, what are the chances for us today? How are we going to be trading the XAUUSD, especially as we look forward to the US macroeconomic data today? Please remember, I told us all earlier, let's move all stop losses on the current buy position and secure it adequately, as we may see some high level of volatility coming today. There's going to be some pumping of liquidity into the market, as key players will start coming back into the market as the event draw near. So as a result of this, I have a new trading setup to guide our trading decisions today. Remember, we are still in a buy position, and I did mention that we move all our stop losses. Let's secure the current buy position. Now, with that in mind, we have a new trading setup at this point in time. Now remember, Our key level still remains intact at the 2,325 area, as price action is still trading below the key level. And you know, when price is trading below our key level, there is a high chance that price action may continue to the downside. Now, in addition to the key level, if we consider the impulsive leg that started last week Friday following the surprising figure from the NFP, you will see that price action appeared to have transitioned into a structure that is looking more like a downtrend continuation pattern, coming in the form of a flag pattern. And depending on from which perspective you are looking at it from, you could also call it a pennant, or let me say a rising wedge, depending on whatever perspective you are looking at it from. But from a theoretical standpoint, this is more or less looking like a flag pattern, which is considered to be a bearish flag pattern, which is considered to be a downtrend continuation structure. Now, with this whole situation we have here, and based on the factors we talked about earlier, I think that and if we consider the NFP data that came in last week Friday, we may likely see a CPI data coming in higher than the market expectation, resulting in a positive traction in favor of the US dollar, and this could incite the validation of this downtrend continuation pattern by breaking down both the 2,313 and that support line of that pattern to incite a massive sell-off to the downside. So let's keep this in mind. So we are going to be selling only at the breakdown and retest of the 2,313, which interestingly shares a confluence with the support line of this downtrend continuation pattern. So let's look out for selling opportunities at the breakdown retest of that particular structure. And if you're profitable, you've been part of our profitable journey, you can easily place a sell stop order below that structure. And if it doesn't work, you know that you are only risking some of the profit you had made so far this week. But if you're joining us for the first time, you do want to be waiting for that confirmation to happen, which will come, which is likely going to come in the form of a retest of that structure. However, if that is not going to be the case, and instead buyers will be the one that will be taking the order for the day, maybe as a result of a lower than expected CPI data, or probably a reduction in interest rate today. These are surprising figures for me anyways. If that is going to be the case, then the path of least resistance may look to the bullish side, and we could be looking out for more opportunities to buy at the breakout of the 2,325 level. Remember, we have a buy position running. We've moved our stop losses accordingly. So if price goes ahead to break out of the 2,325 level, we will be adding more buy positions to our existing trade. So our center of focus today is basically around between the 2,325 and the 2,313, where we have an important downtrend continuation pattern evolving at this point in time. And of course, we're still waiting for the confirmation to happen in the form of the breakdown of the 2,313. So let's see how the market is going to play out from this particular point in time. It's a simple setup we have on the XAUUSD. So I encourage us all to mark out the structures levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And do not forget, today we are going to be running the XAUUSD live window one more time today. And for those of you who have been part of us, you know how we do it. It's an avenue where we come together to monitor real-time price action on the XAUUSD during the New York session. And for those of us who are not familiar with this, the XAUUSD live window is a platform where we come together to monitor price action during the New York session. So it kickstarts about 5-10 minutes into the New York session and lasts for about 5 to 7 hours, depending on the volume of trading activity for that particular day. So I look forward to seeing you all in the comment section of that platform as we continue to monitor price action on the XAUUSD. And that reminds me, for those of you who had clicked on the like button, I really appreciate your support. You guys are wonderful. Thank you very much as you do so. And for those of you who are yet to do so, please do. It doesn't cost you anything, and in fact you are helping this community to grow, and thank you very much as you do so. So let's see if there is going to be any questions, or if you need any further clarifications as regards to the structure. Feel free to let me know in the comment section. So I will be taking the next 10-15 seconds off. Let's see if there are any questions, while you also use that time to mark out this new structure we have identified on the XAUUSD chart. So I will be seeing you in about 10-15 seconds from now. Cheers. So I see your comment from Swing Pirates. I hope Swing Pirate is still around with us. It says here, I think I will wait for New York session. If the London manipulates sellers, I will enter my buy. All right, it's all well and good. But which asset are you talking about there? I guess you're talking about the GBPUSD, right? So what did we say on the GBPUSD, if that is what you're talking about? I hope I'm correct in that case. So like I said, we already have a buy position on the GBPUSD, and I did mention that we move all our stop losses accordingly to secure our current buy position. And from the look of things, it appears that buyers are trying to gain some traction irrespective of the poor data that came in from the United Kingdom this morning. If you would ask me, I will say that the path of least resistance for the pound sterling is looking bearish, and due to the poor economic data we saw this morning, the GDP, the economy did not expand at all throughout last month. Sorry, the manufacturing sector is not doing very well. The industrial sector is not doing very well, and of course, we had last month that the Bank of England, Andrew Bailey, said that they are likely going to be cutting interest rate as early as the month of June. And remember, next week is the Bank of England's interest rate decision. And we've also heard about how policy or stakeholders of the UK economy has been clamoring for interest rate cuts due to the sluggishness of the United Kingdom economy. We saw the labor sector not doing very well at this point in time, and with this development here, I still think that the Bank of England may likely cut interest rate next week, and as a result of this could exert some selling pressure on the pound sterling. However, we can't jump into conclusions with just sentiment alone. We really need to see how the market participants are reacting to this data, and of course this will reveal itself through on the chart as price action. Now, looking at price action, it appears we are looking at a very solid or robust demand zone where price action has maintained above the 1.27 area since the beginning of this month. And you know how we use our key level. Remember, we have our key level for this week at the 1.275, and as long as price remains above the key level, we look out for buying opportunities. However, there is something I would like to show you that we mentioned on the on this our previous chart here. Let me scroll in, and if you remember, we had this ascending trend line on our 4 hours time frame. So we had this ascending trend line on our 4 hours time frame. Should I show you on the 4 hours time frame so that we can all be on the same page here? So look at the ascending trend line here. Look at it here. That's on the 4 hours time frame, and look at how beautifully this ascending trend line has been supporting the bullish momentum in the last 6 to 7 weeks, and at no point in time did we see price break down this ascending trend line. And the only time we had a breakdown was last week Friday, following the US NFP data. Now, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we will maintain our bullish bias by looking out for patterns and structures that supports the idea of buying. But if price breaks down the ascending trend line, you know that is a bearish signal, and of course we want to be looking out for patterns and structures that supports the idea of selling. Now, with this understanding in mind, if you look at the structure here, you will see that price broke down the ascending trend line last week Friday following the NFP data, and from a technical and theoretical perspective, we expect that price may come back, retest the trend line in an attempt to continue the downtrend move. Hence, we were able to identify a zone right here between the 1.27860 level and the 1.275, where I said we should look out for how the market will react to that structure, and if any form of selling pressure resume around this area or evolve into a double top, head and shoulder, or a rising wedge, then we want to be joining a bearish momentum. But if price climbs back above the ascending trend line, then the breakdown we initially mentioned will turn out to be a false breakdown, hence we'll look out for more opportunities to buy. So that is the perspective we saw here. I do hope I clarified there. With that, a swing pirate. I hope you're still around with us. So that is what we talked about on the GBPUSD. Okay, thank you very much, Terex. Thank you very much. Wakocha, good morning to you. Thank you very much, Sheriff. Thank you very much, Richard. Terex says it's New Year. Glad to have you around here, Terex. I trust you had a wonderful moment with us. I hope you gained one or two things from what we discussed here today. All right, you're very much welcome, Terex. So I think in the absence of no questions, we have come to the end of today's Forex Morning Mastery session. It has been a wonderful moment with you guys today. I really love the energy. Your engagement in the comment section has been wonderful. Your likes has been tremendous. I really appreciate the support you have given this channel so far. So today we were able to attend to the 3 financial instruments on our watch list for this week, which includes the USOILSPOT. We also touched on the GBPUSD, and of course my favorite amongst them all, which is the XAUUSD, popularly known as the gold spot. And we were able to identify simple trading setups using our basic tools such as the trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. And of course, I did mention how important today is. We are looking forward to the Fed interest rate decision. We are looking forward to the CPI data, which obviously is going to be giving us an insight into the trajectory that the Federal Reserve is going to be adopting for their monetary policy for the remainder part of this year. And the CPI data is coming in about 3 hours from now, so I encourage us all to mark out that timing. We want to be around to see how the market is going to be anticipating and of course reacting to this data. And I do hope you all marked out these levels and structures accordingly on your chart. If you have done so, well done and kudos to you. So all we just need to do right now is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place. And for those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand my analytical approach, which eventually will boost and enhance your independent trading decisions. So I look forward to seeing more of you. Same time on Friday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare for another volatile day, which happens to be the last trading day of the week, where majority in the market will be rounding off their trading activities ahead of the weekend. So I look forward to seeing you guys on that day as well. So it's on this note I would like to wish us all the best of luck today, and at the end of the session, you are going to be seeing the link to the XAUUSD live window. Click on that link, click on the notify me button so you can get notified as soon as we come on live. So I wish you the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.